You're trying to make 1 to 2% return on your capital. So if you made $100 off the 5K, it's going to be 2%. You made $50, it's going to be 1%. In this video, we're going to discuss the process of making money using the 7 DTE trading strategy. DTE means days to expiration. A number of people are pushing the 0 DTE trading process, or the day trading with options using the SPX. And that is a powerful strategy. You can make a significant amount of monies on a daily basis. But that process has the most risk. It has the most gamma risk when you're trading it, right? Because everything has to happen within that day. If something goes wrong, you have to be able to adjust, and if something goes wrong too much, you can lose a decent amount if you don't have really good risk management. The better way to potentially trade short time frames is to trade the 1 DTE process, which we talk a lot about on our channel, and you can see other videos on that. You do have overnight risk with 1 DTE trades, and you have a lot of gamma risk. Not as much as the 0 DTE trade, but you still have the second most gamma risk because it's a 1 DTE trade that's going to be a 0 DTE trade that next morning. Okay? And that's a really good trade. But I don't think it's a beginners who are looking to do things that are short term, to looking to learn how to trade options and accelerate their learning process by doing short term trades. The 0 DT trade should be out of the question, and the 1 DT should be something near out of the question until you understand how to manage your trades at a significant level, and you understand how to use stop losses. You understand how to adjust trades by doing what we call it the Dorian way, a roll up or a roll away. You understand what it means to roll out into a different expiration period. All of these things are super important when you're trading, period, but even more important when you're trading short-term trades. And we're talking about in this video the 7 DT trade, and it's kind of a mixture, right? It's still got a lot of gamma risk, it's still some risk, but it's not overnight risk, it's not the same day risk. You have a little bit more time to be able to understand what's going on. So if you know how to do at least a roll out, then the 7 DTE trade could be a really good strategy for you. But if you know how to do a roll up adjustment and a roll away adjustment that we coined that the Dorian way, then the 7 DTE trade can be life changing. You can make a significant amount of money trading the 7 DTE process using no more than $5,000 per contract that you do. No more than $5,000 per contract. So if you only had $5,000, what we're going to show you in this video is how you can make at least 1% a week on your monies, which will be phenomenal, right? If you made 1% every week, and in a 4-week month, that's 4%, and that's not compound. If you compound it, it's more than that. That can be in a phenomenal return. But you have to understand the process. You have to understand the risk. You have to understand what you're doing. So let's talk about the process. So at the Dorian Way, we teach members basically what we're going to tell you right now, but not all the details. We want you to be able to join the Dorian Way, learn from us, and learn how to make a significant amount of income on a consistent basis with this 7 DT trade that we do every week. Okay? So you have the 7 days expiration, as you can see here. Okay? And you have what is called an expected move here that you want to look at. You have an implied volatility, and you can check out the expected move by doing the straddle price as well. So the straddle price here is 49.20. The expected move that TastyTrade is saying on their platform is about 47.50. Okay, about 47.50. So you can determine how you want to place this trade based on this expected move. Normally, we're trying to get 2 times the expected move. So let's just say that the expected move is 100. Right? We're going to round it up to 50, and then we're going to go 2 times that. Let's say the expected move is 100. So if it's currently trading at 45.82, then on the call side, the 2 times the expected move would be the 46.82. So let's see where we can go. Can we go that far out? So that's a 5 delta. Basically 46.80 here, 46.85. So that's a 5 delta. And let's just say we're only going to do a 10-point wide spread. Okay? So that's 2 times the expected move. And if you go to the put side, that would be 44.82. And if we go down there, that would be basically around here. Right? And if you do a 10-point wide spread, this is how it would be set up. You'll receive $90. Right? I said if you use $5,000 or 5K, you should be able to make $100 after fees using just 5K. Right? And in this scenario, we're going to show you're only going to do a 10-point wide spread iron condor on both sides. And so your max potential loss before the credit you receive is going to be $1,000. After the credit you receive is going to be less than $1,000. So you're only going to you're trying to make 1 to 2% return on your capital. So if you made $100 off the 5K, it's going to be 2%. You made $50, it's going to be 1%. Excellent return percentage wise. Absolutely a phenomenal return wise. So if you were making 100 and you had $10,000 and you did 2 contracts, well, that's $200 in a week. If you had $5,000, that's $300 in a week. You can see where I'm going, right? You can see how every 5,000 you have, you're expecting to make $100, right? And you're only using 1,000 of that 5,000 initially, so that you can have that other 4,000 on the side to be able to adjust, deal with issues that might come up or that eventually will come up. Okay? So in this scenario, we're only receiving $90, so we would have to adjust this trade, and you have to determine how you wanted to adjust this trade. And so normally we're going no higher than a 10 delta. So we went to this 10 delta here on the put side, and we did a 10-point wide, and you can see down here now it's giving us 110. So still not a significant amount after fees and commissions and wanting to get out of the trade. So if we bring the call side up as well to a 10 delta, we started with the 2 times the expected move. We're going to basically be inside of that, but more than the move. So if we went here, that's a 10 delta. And so now you're getting $155. $155, you're using $845 of your monies, and you'll be able to put this trade on and get out. And let's say you got out at 55%, so you take the 155 and you divide that by 2, that's getting out at $77 basically. Let's say after fees and commissions you got $70, so you take your $70 divided by your 5,000, and that's going to give you a 1.4% return on your capital, and you got out at 50% profit. A 1.4% return on your capital. You can see that you're going to, if you add up the deltas, you got an 80%, basically an 80% chance of winning on this trade. And that's holding it to expiration. You got an 80% chance of winning at least something if you hold this to expiration. If you do this based on getting out at 50%, it's going to be higher than this 80%. You might have, an 85-90% chance of winning on this trade, of getting to that 50% target profit level. All right, so this is the type of trades we set up. We give you more details around it, but this is the type of 7 DTE trade that you can execute and make a significant amount of money week after week after week, if you understand the process of risk management, of being able to adjust the trade using the concept of what we call as a roll up and what we have coined the roll away. You can make a lot of money doing this. And obviously sometimes you're going to have to use what we call the roll out, and we give you that criteria when you need to roll out and when you should be adjusting, doing the roll up, doing the roll away. If you're interested, please like and subscribe to our channel. We'll provide more videos on this. We have others. Just go through our channel and you'll be able to see some of the other videos we have on this process. If you're super serious about learning and supplementing your income, you can consider joining the Dorian Way. You can get to our website by one of the links in the description. And if you have any questions, you can always email us. You can also put a comment in below We answer all our comments. All right. Thank you for watching the video. We'll see you next time.